Okay, I think it's working. Yeah, okay, 100% working. All right. Okay, I think it's working. Sorry, double audio. Okay, so 1-800 flowers is why we're here. This is my first time doing this. This is going to be absolutely terrible. Everyone's going to have to bear with me. I'm going to figure this out all along the way, okay? But the thesis is strong. All right, so first let's get into 1-800 Flowers. 1-800 Flowers is a company that has been around for a long time. They have been around since, I believe, 1979. Let me see if I can pull up some stuff here. I probably don't know how to do anything here. Da, 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 da. Let's see if I can get Google up. All right. I cannot get Google up because I suck at this. Let's just go to sharing my whole screen. That's the only way I know how to do this. Okay. Let's go to display capture. Yes. Yes, yes, yes. Ah, all right. Ignore that. Okay, here we are. So let's get up 1-800 Flowers. All right, 100 Flowers. All right, so how I found this company is very interesting. Um, it is down the street from where I live. It's, like I said before, been around since 1979. No one really understands this company. Sorry, 1976. But they've been around for a long time. They're more of a conglomerate, I would say, in what I would call gift retailing. Um, People just think of them as a floral business, but they're really more of a distribution company, as you can see here. They're kind of like a marketplace for small mom and pop flower companies. At least that's how they got started. And then over the decades, they've acquired other companies. Um, cool things about this company are they've been around since the 1-800 days when we all used phones to order things. That's why it's 1-800 Flowers. That's very important and impactful for value of data because as they pivot to the future, and data is super important for things like supply chain. Um, Having real raw data all the way back to 1979 pre-internet days is very valuable. Um, Over the decades, they've acquired tons of other things. As you can come down here, they're not just a flower company. They own Cheryl's Cookies, Alpine Confections, Design Pack, Sherry's Berries. There's more here that they don't list. Another big thing for them is BloomNet that we'll get into later on. Um, they also own Harry and David. Okay, Harry and David is very important to this story because Harry and David alone is probably worth their market cap. Okay, so what do I mean by that? Let me make sure that this is working. 1 second. All right, perfect. So what I mean by their market cap for just Harry and David. If you look at headlines like this, right? Reports loss. Oh my God, it's terrible. Losses everywhere. Losses. They had revenue of this. Blah 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 blah. Okay, but let's look at Harry and David's orchards in Medford, Oregon. Okay, I believe they own 2,000 acres. Here we go. Let's see. A little bit of history. So this is why this story is super complicated and no one wants to go deep except for smart money hedge funds. Harry and David's is its own thing alone. You can create a whole YouTube series just on Harry and David, and you could probably do that with a lot of their brands. So I won't bore you with the details of Harry and David, but I wanted to find proof of their 2,000 acres that they own, because that's important because I wish I had it here. Ooh, look, they maintain 2,700. I believe they own 2,000. All right, I'm not going to bore you with the details, but basically, they own these orchards. Um, I think that's probably why it's misleading. I think at some point they did operate those orchards, but I think they've since bought them and planted the orchards. I forget exactly the year, maybe around 2020 or something like that. Whatever the year is, it's about the same amount of time that after these orchards are fully blooming, which they're about to now, to become real orchards and not just raw land. The now value of 2,000 acres of orchards is almost worth 200 to 300 million alone. I won't bore you with that. Look into that because you guys can decide how deep you want to go there. So this just kind of gives you an idea, just to starting off, what this company is, why they're so complicated, um, why no one else is understanding them, where the value is coming from, um, yada yada yada. Okay, so I have tons of other documents to talk about how this company should be valued. And the problem with all of my thoughts, if you can't tell, is they're completely scattered. So you're gonna have to bear with me, and over time, I'll organize this all because I can't really explain it accurately. That no matter which way you look at this company, all indications look amazing. Okay, and on the surface it might not, but for sure, if you look deeper, you can see. Give me 1 second. All right, make sure this is still working. Yes, yes, yes. All right, perfect. All right, so back to their valuation. So this is even outdated. I did this a long time ago. Probably have better ones now, but this kind of gives you an idea of number one. Okay, so this company was priced for bankruptcy. Okay, if I want to pull up the stock, you can look at this now. We can kind of go over the history of this company from the stock market. So you get the history of this company overall. Started in the 70s. It's had its heydays and it hasn't. And I'll explain. It's better to look at the stock chart to kind of get an understanding. And then, as we get deeper into this, I can explain or prove that I'm not just BSing here. All right, so let's see. So if we go all the way to, no, check the Discord. All right, gotcha. All right, so this company, for at least for Yahoo Finance, I think I'm allowed to go back 5 years. That's what I'm looking at here. No, longer than 5 years. What's this? Okay, yeah, 2000. Okay, so back to 2000. You can see, I mean, at first you look at this, it doesn't make sense, but since I've deep into this thing, it makes perfect sense to me. Okay, so this company is often hard for the market to value. Okay, it's probably anywhere from, $4 to, I would say, 12. And that's where you get into the argument of intrinsic value versus market value, right? The market is valuing this up and down for the past 26 years in between this range. Okay. And in the dips down here, when you look at the times, are, sorry, I'm checking my messages. So if you look at these dips, they're all correlated to impactful timeframes in history. 2008 financial crisis. Look at this, it got as low as $1. The bubble after 2000. I believe this was a company that was highly, it ran up in a bubble back in the early 2000 days. 1-800-Flowers becoming an online giant, not just a telephone guy. Oh my God, we overvalued all of the stuff. Oh, crash. Oh my God, the crash of 2000 from all the tech, the pets.com bull crap. Okay. Company, people look at this company again like, oh wait, this company does have cash flow. It's got cash flow. It's got cash flow. Okay, all right, it's not a bad company. They argue about this. Okay, I don't know. I don't think it's a bad company. Where we're here, 2008 financial crisis. Boom, starts there. As we know, I can probably overlay this with other stocks, and it's basically the same. That we think we're out of the woods for the 2008 financial crisis, but this was like blood in the water. Then it happens off a cliff, boom, down. Someone would have made a lot of money buying this here because this company, as it's proven for the past 30 years, will not go bankrupt. Okay, that's the one amazing thing about this company. The McCann family are fighters. Okay, so now we start moving along, moving along. A lot of these are acquisitions. Hey, we acquired Sherry's Berries, we acquired Harry and David. We just before COVID, there was they were in the middle of turning into a conglomerate. COVID happens. Someone famous, I forgot who it is, someone on YouTube, other people would know more than me, got very famous for claiming that after COVID, this small company called 1-800-Flowers was going to explode from people sending funeral flowers. Well, apparently it did, whether that was speculation or not. It seemed to convince the market. It got as high as $26 during COVID, all from a thesis of funeral flowers. Okay. Then it's clearly a bubble because they're not going to keep having those reoccurring revenues. That was a one-time deal, so it falls off a cliff. Okay. Here's where we get into 2002. Okay. 2002 is how long ago? Let's see. Okay, 2000, is that where I'm at? 2002, or sorry, not 2002. 2023, 2022. Okay, falls off a cliff. 3 years ago is 2023 is when um, I think it's Amit Shah has his falling out. Okay, after 11 years with the company, my speculation, pure speculation, he probably disagreed with a lot of the stuff that Jim was doing, and um, I think he had big visions, basically, and Jim does as well, but I'm sure they just disagreed. So you can see if we go to it's LinkedIn here. Amit has had a great career since 1-800-Flowers. He's moved on to MMA Global, Blue Apron, love Blue Apron, AI Trailblazers, and now he's the founder and CEO of an AI company. So clearly he was the talent that they missed. Okay, back to the charts. So Shaw leaves in 2023. Stock clearly takes a tumble. Okay. Here is where John McCann rolls up his sleeves and he says, I'm getting a little bit older. This is speculation now. Okay. I have a lot of proof to back this up, but I don't want to bore you with the details. So we're painting a story here. So this is where John says, I'm rolling up my sleeves. I'm getting old. He's in his 70s. I think he's getting closer to 80. I can't remember exactly, but he doesn't want this legacy to die. I don't think any of his kids are interested in it, but he's, this is a legacy. He doesn't want to just give it up. He's fought off bankruptcy all these decades. If I could go back longer, it would show. Um, he tries hard to pivot, and I believe one of his pivots is, adopting to the new way of things and spending a lot of money to optimize their efficiencies with systems, so software. They spent a lot of money on one of their order management systems, I think for BloomNet, that allowed them to was supposed to allow them to more efficiently, I guess, service customers from BloomNet. I don't want to bore you with that details. We can do a whole podcast on why that failed and stuff like that. But basically, they tried to implement new software. It failed. It was one of the big things to their P&L that brought down their value. And since then, it's been a battle for John. Okay, he's struggled to get good talent, right? Because um, because when everyone doesn't know who you are, right? You're a company that you're 1-800-Flowers. If you're the top talent in the world, you're not really looking at 1-800-Flowers. Normally, this would be fine if you were back at these days. You got a lot of shares to give as value to new people, right? You get some guy from Amazon and say, "Hey, look, I gave you a bunch of shares in the company. We'll make it grow even bigger. Look how big we're growing." But here, where he's at, he doesn't have a lot of options. They don't have a lot of cash. Okay, they're a cash flow positive business, but is not they're like $2 billion in sales almost, and their cash flows are like in the hundreds of millions or less. That's why their valuations are so low. But they don't have a lot of cash. All of their cash needs to be saved for future investment in some sort of a growth. So what does he do? Now we're getting into for real speculation, okay? All I know for sure is shorts start attacking here. They start driving down the price of the company a lot. We get into February 2025, and something very important happens in February, okay? In February is when we have the smoking gun, okay? Right here. Do you see this, guys? February 18th. An unaffiliated third party, Pleasant Lake Partners up here, will provide economic exposure to the aggregate of 3.6 million notional shares for a swap agreement. Okay, so this is, if you don't know what this is a total return swap. Okay, I believe there's mentions of it in other ones, but I was quickly able to find this one in other SEC filings. But basically, as I understand it, after GameStop and all of the other short squeeze things where there was speculations that total return swaps were used, they started changing the laws of reporting. You had to like put them in SEC filings. I haven't went down the rabbit hole here, but I feel like someone could correct me if I'm wrong, that this is legal but a little shady, meaning that you can technically put it in the filing, I think. So let's go back. Okay. This is Jonathan Lennon's filing. He is the managing member of Fund One Investments outside of Puerto Rico. Um, I believe normally this would be, oh, there you go. Total cash return swap. Third. So this one's for 30,000. So the other one, yeah, here we go. 3 million. That's it right there. So I guess this is an update. Ooh, and it expired here. Oh, this is interesting. Interesting. Okay. So this has been rolled over. Oh no, this doesn't. This is actually very interesting. I think I just realized this here. Interesting. I thought the expiration date was here. I'm gonna have to look into this. Let's make a note of this. So my original theory was if this was signed here with total return swaps, they usually have 1 year to roll over. And I did look in past SEC filings to make sure this wasn't the rollover one. But I missed this expiration date. That's very important. Okay, so what this means is this is a real date for the expiration date of the derivative contract, is that on that date, or actually about 30 days before, I believe, they have the option to notify each other, both parties involved. That's Jonathan here for Fund 1 and the market maker that signed it, which I believe, I have a speculative theory that it's BlackRock. I have some SEC filings, but I'm not 100%, not an expert here, just trying to piece it together one piece at a time. Um, but I believe that whatever the party is that signed it, they have to notify each other. Either one, I believe, can decide to roll it over or ask to execute. Executing means Jonathan would ask back for this 3 million.6 shares. Okay. Now Jonathan did this at an $8.07 strike price. So we know basically we have a number behind what he's hoping for. Okay. Um, so that already kind of gives you a valuation. Jonathan's not in this unless it goes up higher than $8. The stock's at $4 a share today. Okay. So back to where we were, right? Told you about this company, 1-800-Flowers. Told you about their holding company status. They're basically a conglomerate of a bunch of gift things. They have a story that we can tell through the stock chart. Okay, they're they've had a bunch of possible pivots in their history where they failed. Okay, but the key is back in, I thought actually February, but I'm changing my mind now. Back in that date, that it's really back in. I guess it's in this date here, June, which makes a lot of sense. This is interesting. I don't know. I have to look into that actually, because it just says when it expires. They normally are 1 year to expire, but it could be different. I have to look into that. But bottom line is, everyone keeps asking me for a date of when this is going to happen. I don't know that. I just know that um, there's a complicated strategy here at play, and I've definitely figured it out, and I'm going to follow along and track it and try to play as well. Okay, so back in February, we get total return swap sign. This guy, Jonathan Lennon, joins. Jonathan Lennon has an SEC filing as an active investor for 1-800-Flowers. So he's not doing anything illegal. He clearly he filled out all of his documents correctly. Let me show you who we're talking about here. Okay. But the weird part is, what is Jonathan's plan here? Okay, so Jonathan is Fund 1 Investments, right? Fund 1 is definitely, with public information, an activist investor for 1-800-Flowers. Okay, now let's get into speculation. Okay, speculation is that Jonathan is not just some guy. Okay, Jonathan is well connected. Here, it's purely speculated, but with a lot of evidence that I can provide if needed. He comes from Goldman Sachs. He worked under a tiger cub, which, if you don't know what that is, tiger cubs are part of these guys here. Okay, uh, tiger cubs are part of Julian Robertson's Tiger Management Fund. So these are people that are related to him that were Um, Proteges of his, Bill Wong is one of them. He recently went to jail for his failure in over leveraging with TRS, total return swaps, causing a big collapse. The whole market collapsed that day, if everyone remembers. That's a whole podcast on its own. But basically, that's what total return swaps are, a way to take hidden leverage in a company so that others can't see, right? So that's most likely, fully speculation here, what Jonathan's doing. He is, on one hand, increasing his leverage into a company more than as the maximum amount as possible, hiding it as best as he possible, it's just speculating, and then simultaneously coordinating a turnaround story by helping to implement a lot of the new C-suite changes. So, like the recent CEO change, Adolfo, he's the new CEO. Adolfo comes from. Adolfo was named back in May. Here he is. Oh, he didn't even have a picture. No, he's a very smart dude, okay? I don't want to get too speculative here. He comes from Home Depot. That's his original thing. He's in a similar he's in a similar industry that I'm in. I'm in this industry right here, merchandising and supply chain. That's how I found out about this. I saw roles for this company. They didn't really match what I thought of this company, so I started looking more. Okay, look, okay, this is important. Okay, he was a board member for Kohl's, guys, in 2023, November 2023. Let's just check that out real quick. All right, guys, remember Kohl's? I just want everyone to remember that this is all speculation, but most likely the world is smaller than we think, okay? All of these people are connected, they're all friends. Speculation. This is purely speculation, but I have a lot of evidence. As my favorite George Carlin used to say, when interests align, you don't have to have a conspiracy, okay? So, he was a board member for Kohl's back in November 23. What happened in November 23? Oh, look at that. I believe it was after this short squeeze. Or they're kind of actually in the middle of this short squeeze now, I believe. Kohl's is one that's also been influenced secretly by private equity, is my point. I was trying to look for a key inflection date here, but I couldn't remember it off the top of my head. I feel like, what was this, 2020? This might have been the Kohl's squeeze that I'm thinking of. And then he joined the board right after. That's kind of interesting. I don't know what that means, but all these guys are connected, is my point. They're all connected to one famous law firm, okay? This is Jonathan Lennon's most likely, from all the evidence I've gathered and public information, this is most likely Jonathan Lennon's private law firm, okay? Ulshon, okay? These people are the speculative people behind most of these squeezes, okay? In my opinion, they help to orchestrate these things legally, right? When a hedge fund has an idea that they want to orchestrate it, but they need top tier talent to execute, supply chain people, AI people, whatever, then they also possibly need other market makers involved for the total return swap signing. They have to do this legally, so it's not coordinated, okay? And also, my theory is another speculation that they do this so that they all can make money. The markets are a zero-sum game. I keep trying to think about, what's his plan here? Is he trying to unload the bag, for lack of a better term, onto retail at some point, you know, by getting retail to finally look at this company organically? Or, a more charitable way of looking at it would be he is just simply changing the views of the total market for this company to for it to be invested in, all kinds of funds. So one of the big key factors here we keep talking about is Vanguard. This Vanguard purchase just recently happened. Vanguard, as we know, is like a bigger, more of like retirement fund, pension fund, 401k type thing. They would never invest in a almost bankrupt company. And the fact that they just filed their 13F saying that they went in 1 million shares in a constrained float stock is insane. Absolutely insane. I would speculate that there's some weird shadiness going on there. Okay. Um, Back to this though. So all of these gentlemen are also speculatively connected. You see how all of these guys own less than like 10% of the float collectively, but I can show you through evidence that they all most likely know each other. Okay? I'm talking about Nantahala, Newton, Fund One, BlackRock, right? Where did I say Jonathan came from? It's funny that the years that Jonathan worked at BlackRock in the same department, these guys worked there as well. Okay? And then that's where I found some of the connections to the Tiger Cub lineage um, for what's his name, Julian Robertson. It's a interesting web. All these people are friends. Okay, I don't even want to get into Millennium Management. Okay, Millennium Management is the fund that backs Fund One. Okay, Millennium Fund backs Fund One or Pleasant Lake Partners. Pleasant Lake Partners. That's another complicated thing with hedge funds. Look at that. Millennium Fund commits capital to Pleasant Lake Partners. Isn't that interesting? They're on the other side of this trade, I believe, at $14, but they are also funding Pleasant Lake Partners, which is Fund One. That's what Fund One is. They're the same person. This is very interesting. Okay. Yeah. I didn't even see this actually. I might have to look at this later. Alright, so where are we at right now? So a freaking story, huh? Undervalued company, too complicated to value, been like that its whole life, not going bankrupt. Um, Please challenge me on this. I can come up with 1,000 reasons why it's not going bankrupt. All I have to say is look at their last earnings report that they just did this week. Okay, their pivot. If you just listen to the earnings call from this week and prior, it's basically, hey, we're going to try this thing. Hopefully it works. If it does, we're going to see margin improvement. And, we're a $2 billion sales company. If we can even lose some sales and just, get to normal margins like a normal company, that's going to 5x us. Okay. All right. So it's undervalued. It's being orchestrated in a turnaround by private equity and the same players, most likely, as GameStop and all of these other companies. I have other cynical speculations that I have very key dates that are very suspicious of when, for example, Fund One dumped 3 million of their shares at the exact time that Newton and Nantahala decided to buy the exact amount together that Fund One dumped. So that was very interesting to see how they're in for this for $5 and everyone else is in for 8. I don't know how that works, but I'd be interested to know if you know, how do they split the profits here? I don't know. It's just a little speculation. But this is what they're doing, guys. They are making a constrained float. Okay. I don't know how much I can say that. Let me see if I can get some pictures here. Let's see. Let's see. I got tons of stuff. Tons of stuff. No, no, no. Maybe we should talk about the float, okay? Because that seems to be one that everyone doesn't understand. So let's go to, I think the best is to go to my Discord server. Okay, sorry, deny everything. We were talking. Feel free to join this if you want to. What's important here? I have a lot of people ask me things like, where are you getting these float numbers from? This is insane. And actually, let's go to my LinkedIn. It's probably better. Ignore my face, don't stalk me, and then you're gonna, whatever, I don't care. Okay, all right. So, some of my LinkedIn posts, I know, I'm a little manic. That's just how I am. I don't have a good one for this. We're gonna have to go to Discord. Where you at, babies? You know what? I got it on X. That's where I got it. All right, so I am. More to the story is apparently I'm not allowed to talk about this. Okay, I'm getting banned everywhere. Anytime I talk about it, I have like 7 accounts all banned from um, Reddit. I keep getting throttled on X. People keep reporting me. Oh, look, there's me. Haha. Okay, here's some of the stuff I've been posting. It just helps me organize my thoughts a little bit here. Let me see. I definitely look like a crazy guy on X. Here we go. This is what I want. Yes, all right. The float. Why? How? What the heck is going on here? What the heck? You got Yahoo Finance as the float is 32%. Then you got Fintel saying the float is 107%. And then this friggin' idiot from Reddit is like, it's greater than that? What are you talking about? It makes no sense. I know. It doesn't make sense. It's crazy. That's crazy. Let's see. All right. I got too many things open. Goodbye, Harry. Goodbye. Let's see if we can get the float up some flowers. All right. Come on. It's got to be in advanced, right? Where is it? Profile chart. Where is it? I know it's somewhere in here. Statistics, maybe. Percent float. Yeah, there we go. Okay. They have the float at 12 million. Okay. And they have this at 9. Okay, so they actually, this must have been an older update that I had. They probably got this more correct now. So if they have 9 divided by, what was it, 12? 12. Yeah, 12. So they're claiming it's 75%. Okay, they're claiming that 83% of the float is locked up by institutions, but that's actually off of this. So I guess, yeah, that's what they're saying there, which is there's 64 million shares outstanding. If 84 is locked up, that makes 10 left. They got 12. Okay, whatever. I did my math a little wrong, probably. Um, I would argue that that's more. All right, you guys want to break this down? So we got 64 million shares, and then we got the McCann family ownership. Uh, how many shares does the McCann family own flowers? I have this all written down, but it's just easier if I do it this way. Yeah, that's not it. They own more. They own a lot more. I believe it's in my graph. Let's see. I know I got you somewhere, bro. Where you at? Here? Okay. Yeah, here we go. Probably this one. Okay. So, oh, this one doesn't have it either. I need the McCann family. Where you at, McCann? Oh, Mr. McCann. Oh, Mr. McCann. I'm just a spamming everything all the time. Mr. McCann. See, this is me trying to alert the world that there's a TRS strategy afoot and no one cares. I'm getting so frustrated with it. Oh my god, I can't believe it. It's not anywhere. Let's see, it's gotta be my little float calculation somewhere. No, no. This one maybe. I don't freaking know. I'm gonna ask Gemini. Sorry. Gonna go the cheap route. How many shares does in the can, family owned of floors. Okay. Just so we can settle this once and for all. I know this is a waste of time, but people like to argue about this on the internet so much. Okay. So the confusing thing here is, okay, so yeah, they have 40 million shares. Perfect. That's what I knew. Representing more than 51%, right? They also have supermajority voting shares where 10 votes per share. Um, So that's why like that's the risk to like bankruptcy, meaning that like they could get like a hostile takeover, someone drives them into bankruptcy and sells off all of their brands for parts. That's what one private equity strategy would be, but since you can't do that with John's unique structure, they had to do this approach. So if you take away John's shares, we have 24 million shares floating in the market today. Okay, of that, this is just the most recent. I promise you, this is most likely changed, and I can prove this in the order flow. We have what was it, 24 million, I think, right? It was 64 minus what were we at? Yeah, 24 million. Okay, we got minus 9.5 for Jonathan's share, minus 3.4 for his buddies who used to work with him at Goldman. Newton is some more of people he knows. Speculation, just speculation here, just a little speculation. Dimensional fund, I don't want to say anything about them as well. Okay, okay. It's also important to look at the prices that these funds got in for, right? Why are these funds in it for such? What we were at we're at 24. So you look at 24 minus 9.5 minus 3.4 minus 2.5 minus 2.1 minus 1.7 minus 1.4. Okay. The float just gets tiny. Okay. And all of my naysayers will say that, oh, this is how every company looks. Every company is always owned by 100% of ownership is owned by, like, retail gets to control 1% of the float. Yeah, that's true. But for this particular company, it's not that, BlackRock and Susquehanna and all those guys are controlling, or Vanguard or Fidelity are controlling the whole float. This whole float is controlled by these guys right here. The ones I'm speculating that tried to pull off this strategy. Okay, if you were to add up just theirs alone, right, with its 24 million after John shares and no one else's, right? There's 24 million to trade. Jonathan from Fund 1 controls 9.4 of that. It's almost half. And then his speculative, pure speculative buddies with high evidence control 15 of that 24. Not to mention, I have some more theories about some other characters in here that I don't want to get into at the moment. But basically, okay, this stock is not controlled by me and you. The price is dictated by these guys. Okay, they trade it back and forth. I can show you in the ticker tape. The market maker that signed the contract is most likely suppressing this possible squeeze that's coming. Right, you can see it all here. I would argue that they most likely, where are we at? The Greeks. If you see these contracts for puts, right? Who would do a $1 put on this company? This is insane. I'll tell you who. It's hedging, market maker hedging. They have to do this, God forbid, to be on both sides of the trade to make it balance out. The fact that this is all here is probably also them hedging for a possible squeeze, but they have to dictate when that time happens, and that's why they play around with manipulating the stock price in order to not cause like FTDs to fail and hit right show and all kinds of complicated crap. Okay. So let's sum this crazy company up, right? I don't know if anyone's following along with me anymore. I feel like I'm talking to the abyss. I feel like no one's listening to me, okay? This company is worth, let's go back. It is worth today $8. Right? It was worth $6 before this last earnings, right? Because if you even drove them down to bankruptcy and then sold off all their parts, they didn't have any debt that was payable for the most part. So like even you as shareholders would have got paid out. And that's very rare. Most of the time debt holders get paid out. There's nothing left for shareholders. You don't get anything. This company actually has meat on the bones. That's why it was a zero risk play for private equity. If they fail, they'll just take the company and sell it off for parts, and it'll still be worth more than the $8 a share is what they're thinking. It's definitely worth $6 a share today, and it's trading at 4. But then they had earnings, which put their multiples, which put their margins finally on track with what they were planning. This company is going to be constantly manipulated until it gets to a good price that these people that coordinated this feel it's okay to get out at. I can speculate what I think that is if you want to get into some of mine. This is probably why in this video, and I'll go deeper in next ones. But basically, okay, to sum it all up, 1-800-Flowers. No one can deny. Super heavy short. Okay. You know what? Let's go to Fintel. That's my favorite. Okay, that may or may not be me there. Okay, see we're at 97% short interest afloat. That was higher. That's because they're trying to unwind this. After that last earnings, you're going to see a lot of manipulations of this stock to try to cover in dark pools and all kinds of stuff. This can either be a low and slow mechanical squeeze, meaning they manipulate the volume in order to not have a crazy spike, and they can buy back over time, and by the end of the year it gets to its $12 $20, whatever it's going to get to. Or everyone jumps in early, realizes what's going on, and we reset that price immediately. Back when I first posted this 3 months ago, this was me. Again, I keep getting banned everywhere, so you know even back then, we were at 112%. They have been trying to unwind ever since. Okay, the the floor of this stock was like 350. It's done. It's not going below that anymore. It's a risk-free play. That's the other thing. So whether you think a squeeze is coming, whether you think their valuation is X or Y or Z, it does, the bottom was set. It's not going bankrupt. It's powered. It's controlled by private equity and other big firms right now. It doesn't matter what you think about this company. It's gonna get to the valuation that they're planning, and I promise you. And then just for funsies, I ran a bunch of statistical models and playing around with just to give you an idea. Here's my Visual Studio Code. I got all kinds of crazy stuff here, right? I filed an SEC whistleblower complaint because I did see some illegal activity going on. So I do have some claims. I could be wrong, so I'm not saying that they're true. I'm just saying I had speculation enough to file the TCR submission for the SEC. Okay? All right. So just to give everyone an idea that I did file this. And then no matter what, um, it's a great company, actually. Insane. Even without all this stuff going on, it's a great company. Okay, so, but just for funsies, let's talk about some of the ways that I was able to quantify if a squeeze happens, what it looks like. Okay, so I ran a bunch of statistical models, added some anecdotal stuff to try to guesstimate, which squeeze would this most likely be like? Is it more like Volkswagen, GameStop? I think that's Overstock is the other one, OSTK. Once I used a bunch of models to kind of help me identify which ones seem closest based on looking at like anecdotal inflection dates that I defined, where in my opinion data should be looked at differently. Bunch of back testing to prove that my theories are true, even these theories with multiple decision tree theories. And where we landed is a bunch of walk forward analysis. So it's using like machine learning to do these like walk forward decision trees. Like if this happens, if this happens, if this happens, then what will happen? Um, So it basically assumes same variables as the past, but you can kind of do a walk forward guess of the future and guess, is your theory correct based on the past if it continues the way it did? So with walk forward analysis, we were, 78% correct on a lot of these other stocks, but I was 95% correct on flows. And the ones with the hidden float subset that I had clearly identified in my math was GME and beyond. That just helped us clearly identify once I separated those together. The squeeze patterns had a lot of indicators, lagging and leading indicators that I could use to predict this one. Um, just in putting into perspective, some historical squeezes that tried but failed, and where we possibly sit here. Okay, so here we are with, even this one is outdated. Okay, so this one has the effective float of 17 million. We already just kind of looked together. That's kind of not true. It's actually worse than that. Um, so this old report as well, like this would be, you'll see when we get down to the numbers that these valuations still look pretty good. No, it doesn't give me the valuation for this one. I have valuations. Hold on. This is where I predicted the number of days that we have to go, which is based on, yeah, I don't have, oh, here we go. Yeah, I do have it. Okay. Conservative target, $12. See? So this is, so even based on like just pure mechanics and a regular float, like the most conservative, they're going to run out of rinsing and washing demand exhaustion, meaning the way they try to hide FTDs and their borrow rates and the TRS strategy is by making artificial demand every day with spoofing and rinsing and washing trading shares back and forth. You can only, every time you do that, it winds this squeeze tighter. And we have proven backtesting models that show that you can basically model based on how many shares are out there because it's a demand and supply problem. It's supply equals demand. So if you know supply is constrained, like we know, and demand is controlled by a certain number of funds, it's very easy to model. Isn't that fun? That's the interesting part here. If you believe that price equals demand and supply, and then you can predict supply and demand, then you know what the price is gonna be. Isn't that crazy? So the only thing I don't know is demand, right? I know demand's fund one. This is basically just off the demand that we know. We're gonna hit $12 at some point. Probably all my signs are pointing to around Valentine's Day, but I'm a little speculative now that I saw that TRS date of June, so I have to go back and look at that. Um, but it's definitely coming. It started with the first catalyst was this past earnings, and to compare, just to compare some more past numbers that I had. Let's go back to my Discord. Last time we're gonna do this. All right, let's go. That's my TRS. TRS. Here we go. All right. Comparing to GME, because everyone likes to. So again, this is just the short squeeze part of this, right? Because there's multiple things going on here. We don't even need a short squeeze. And also, a short squeeze is subjective. It depends how you define it. Some could argue that we've already had a mild short squeeze every time it has like a 15-20% day, but whatever. Um, in order to see GME level short squeezes, these are the kind of things that we would need. Some FINRA exempt event. So that is like a sudden change in the FINRA borrow rate. So what people don't understand is it's not that the borrow rate gets high, it's that when the borrow rate goes from one number to another number overnight and that change is huge and doesn't match the historical changes, that means someone's messing with the shorted available shares even if it's temporarily, they're manipulating it somehow. So you got to pay attention to that. Those are indicators. Um, when you add in the possible float, in here we have a 280% float, and I can talk about why we think that might be the case. But basically, GameStop was at 100, and it all goes back to hidden float. We don't know what the real float is because everything is held up by funds that may or may not sell. If we knew they weren't going to sell, then we could calculate the float. So basically, once you subtract who you're pretty sure isn't going to sell, that's how you get the float on like Fintel, where it subtracts John McCain stuff. Uh, McCann, not McCain. um, but um, but here you got there's a bunch more at play. With the total return swap alone, you can over leverage yourself and basically create more shares in the market because you're borrowing off of shares, and those same shares are being traded in the market. That's why if you look at the volume of this company, um, the shares traded in some of these time frames that I've been watching are in the 2 to 6 million a day. It is impossible statistically to trade 6 million shares of a company where we just showed that the float is like 5 or 6 million when you take out all those people, unless those people are trading them amongst each other. And this isn't a normal company where there's 50 players all with 1% ownership trading amongst each other. This is like 5 players with all together over 50% of the company, plus McCann, that's 100%. He doesn't trade. So they're 100% trading back and forth for these shares, manipulating the price, allegedly. Allegedly. All of those, allegedly. Um, I got tons of evidence that they're doing FTD rollovers with hedging with options, tying the ending price, using manipulation strategies to make sure that the price of the stock never gets too high above the IV of the next recent options because that would start the game of squeeze. So that's where they get screwed. If for some reason everyone starts looking at this stock, just saying, and everyone just jumped in, they wouldn't be able to manipulate it quick enough. They're already out of fuel. Um, it would trigger the gamma squeeze because of their options that they're using to hedge right now. It's the same thing happened with GameStop. Same thing. This is what Keith Gill pointed out. Okay, basically said, "Oh my God, someone got themselves in a sticky situation. If everyone jumped on it right now, they'd be screwed." I'm not saying to, just saying. Okay. Um, rest of these things are not important. We're probably going to end it here. I'll get more detailed and better with these stupid videos. I know I suck at this. Sorry, Keith, you're way better than me, but just to give you guys an idea, I honestly, $30 is probably what this company's worth by the end of the year, assuming mildly their plans work out. No squeeze. They just get better at increasing variable contribution margin, which what they're doing is they used to spend all this money on like Facebook ads, Google ads, be top of engine search and stuff. They're not doing that anymore. They're gonna just focus because they have all these weird other avenues of where they get sales. So like example, BloomNet, where they are the like market maker behind flowers. So you open a flower shop, you sign up for BloomNet, and you can get flowers to sell to your customers through them. These are things where they don't really have to pay for customers. Customers pay for them to be on their service, and that's the beauty that private equity saw, which is, oh my God, this company is in a $2 billion a year. Think about that, $2 billion a year sales. Every other company is usually valued at least like one times their sales. If you get into tech, they're like like 5 times their sales or more. I forget. It's hot, super high. If this company was 1 times their sales, that'd be a $2 billion market cap. $2 billion. Let's see. Let's see what these would be. Okay. Let's see how crazy that is. All right. 180. There's 60,000 shares or 60 million shares. That's a $10 billion company. Okay. So a $10 billion company divided by the 2 billion in sales. I gotta do it the other way. God damn, I do this every time. 2 billion divided by 10. Why am I doing this? It's 20%. I'm a freaking idiot. Okay, so or two times their sales, right? What is a good price to sales comp for retail public companies? Let's see. Okay, yeah, see, that's what they're valued at today. They're valued at, let's see, I think they're at the 2.7, right? They're at like 300 million divided by their, let's do it the other way, 2 billion divided by the 300 million. Ah, crap, see, let's just do it this way. Yeah, 0.15, okay, instead of the 0.4. If they were 0.4, that puts them at an $800 million market cap, which is three times what they're at today. If you put them at, if you even got them to, that would be insane, right? That would be 60 million divided by, I can't even do this correctly. I forgot what I was doing. Oh, there's 60 million shares divided by the 0.8, I think. Puts them at like, okay, I didn't do that right. Whatever. Bottom line is, let's look at this. Bottom line is, if they any way that they can get in between this multiple, if they can get, if they're at 0.15 today, if they can double that, they're at close to 0.4. That doubles the stock price. If they double that, that quadruples the stock price. If they eighth that, if they can get anywhere to one, and then the other thing is, what's a good sales comp for tech companies? Insane, right? 10x multipliers. This is insane. All right. Okay. So that's another weird, crazy leg to this is if at some point this company can turn into let's see, 1-800-Flowers transition. Ooh, special advisor role. It's important if you guys ever want to go down this rabbit hole to look at all of these, okay? All of these people that joined are very important at key dates, and you can see it in the data. Yep, this was the most recent one that started this. Become special advisor to the CEO. I didn't even see this one. Oh, I think I know this guy, but you see how this, according to Spark, tip ranks AI analyst closes underperform. Okay, no, that's not what I was looking for. That's not what I was looking for. What I was looking for is AI transformation. So they're in the middle of hiring. There we go. They're trying to be a modernization AI supply chain platform. Okay, so they hired, I don't want to get into it because I'm taking forever to do this now, but they hired another guy that is very big into AI. He's like an activist, kind of like an influencer on YouTube and stuff like that for AI. If they can just compete with, if they can get out of the conversation to even just be a gift retailer, right now they're at a multiple to sales of 0.15. If they could get to, if they got to 2, that would be insane. That's what would justify those crazy numbers that I showed you a minute ago here. If you think 100,000 is crazy, or $100 a share is crazy, that's 100 times 6 million or 60 million, right? Which would be $6 billion company. That would put it at a sales to price of 4, 5. It depends because they're probably most likely going to lose sales as well as they pivot to this higher margin model, but these numbers aren't crazy because most likely this is probably $1 billion company if I had to guess, which means it's probably around $16. If a squeeze happens, you're talking it goes, you know, more than that before it reverts back to the mean. So it's just a matter of when. All right, I'm done with this stupid video. I suck at this. Maybe one day I'll get better. But for now, something's out there. You know where to find me.